I'm here with Mark from BMO. Mark, thanks so much for joining me. So at last check, it looks like in the ETF industry, there's about 60 billion or almost 60 billion in assets under management, and BMO is the second largest provider of ETFs in the country.
That's correct. Thanks for having me. Yes, BMO ETFs is now close to 19% of the Canadian ETF industry. It's something we're quite proud of at BMO because we're a relatively new entrant. We've been in the market for only just over 3 years, so to go from 0 to 19 in a short stretch of time is something we really take pride in.
Okay, and because of the uncertainty in the markets, investors are really risk adverse right now, and they've really been clinging to fixed income. So how popular are fixed income ETFs?
Fixed income ETFs are doing really well. They've been a disproportionate amount of the flows into ETFs over the last couple of years. That segment of the market has really been growing, and that's quite interesting, and I think you've nailed it by saying that investors are somewhat risk adverse because when you consider the low yield environment that currently exists in fixed income, that doesn't seem to be deterring the flows.
Okay, and do you expect this trend to continue?
I do expect it to continue. I think there is hesitancy to fully invest in the stock market. I think people do look for alternatives. I think fixed income has traditionally had two roles in the portfolio. One was yield, and that's somewhat muted right now. The other is the diversification of the portfolio. That is still very much evident and very important to make sure that you offset your equity allocations.
Okay, great. And the ETF landscape is changing every single day. So are there any new opportunities for fixed income investors in the ETF space?
Absolutely. What ETFs really do is they democratize investing. They allow the retail investor or other investors that have difficulty accessing markets the opportunity to get into more difficult asset classes, things like high yield bonds, emerging market bonds, U.S. corporate bonds, where traditionally a Canadian investor might have held a basket of Canadian bonds, maybe some federals, maybe a couple of corporates. Now there's a lot more different things they can do. ETFs are bringing those forward, and more importantly, they're bringing them forward in a very cost-efficient manner. The ability for a client to get in and out of an ETF is very dramatically improving on what they would get in the underlying asset class.
Now, with all these new opportunities with ETFs, one thing I'm a little concerned about as an investor is what are the risks associated? Because I'm investing in them because they're safer. Is there any specific risks with these new opportunities?
Well, it's very important to consider how the portfolio is constructed. Anytime you enter a new asset class, you do have to understand the risks. For instance, high yield bond, there's going to be much more of a default or credit risk than you would have in a traditional investment grade portfolio. Emerging market bonds, you're looking at different sovereign risks that you don't normally see, of course, in a Canadian or U.S. portfolio. One thing we do when we construct portfolios is make sure that they're very diversified. So instead of investing directly in individual bonds, which maybe investors traditionally did more of, when they get into an ETF, they get a much more diversified basket, which is really defraying that risk over a bunch of different issuers and securities.
Okay, and for investors who are a little reluctant to go into fixed income right now because the rates are so low, what's the case for fixed income?
Well, there's really four things to consider with fixed income right now. One is government policy. Certainly we see the Fed and other central banks being very supportive through quantitative easing, keeping short-term interest rates low. I think that's very important, and we see that continuing in the near future. Inflation. Number two, inflation, as long as inflation remains relatively low, that's good for the fixed income environment, and that's what we're seeing right now. Inflation expectations are somewhat muted. The slow growth environment would be number three. As long as slow growth continues for the next little while, that won't indicate future inflation and things that would affect the bond market. And I think the fourth thing that really speaks for the fixed income market right now is the investor's search for yield. I think what we're seeing is clients that are embracing more of credit on top of their portfolio, so they're looking at corporate bonds, they're looking at high yield bonds. One ETF right now that's doing very well in the BMO shelf is our midterm Canadian corporate bond. It's ticker ZCM. That's returned about 6.5% over the last year. It has a higher yield than the broader market by about percent versus the federals. So it's addressing that investor need to continue to get yield in the portfolio. And as yields have compressed, it's also had some price appreciation.
Great. Thanks so much, Mark.
Thanks for having me.
For more information on ETFs, go to the ETF section of morningstar.ca.